All right, so everybody, today I really wanted to just talk about like higher time frame bias building, right? Because we're not doing the Sunday call anymore because it's obsolete. If we're doing the Monday call right after, we're just gonna end up talking about the same thing. That's what we found ourselves doing, or we found ourselves just hopping on the call for about 10 minutes and then ending it. So we figured we just pile it into the Monday call. All right, so today I want to focus on higher time frame bias building, higher time frame direction. First off, just understanding the basic concepts around like determining your higher time frame bias, right? And how that can lead into intraday bias and intra-week bias, right? So the start of every Monday or Sunday, I guess, for many of you guys, but Monday as well. You're just gonna get on the chart. You're gonna mark out your higher time frames, get an idea. You're trying to build a narrative from the higher time frame to determine, where we're going to be trending for the next week, few days, or even months, right? And that's going to help you, well, hopefully, if you get it right, and then you have an idea of where order flow is pushing. It's going to be a lot easier to implement some of those strategies like Power 3 to determine your intraday bias, session range sweeps, that kind of thing, right? That's all built into your higher time frame narrative, right? So the first pillar to good technical analysis is good higher time frame narrative building. Okay, so the first thing that I like to do really is, I think most people are going to jump straight to marking out ISPs, but that's actually not necessarily the first thing that I do. The first thing that I do is I mark out liquidity, right? Because I'm first and foremost a liquidity trader. I'm not a structure trader. Okay, structure is like the training wheels that helps to guide you through what's already happened, right? But liquidity is telling you what is going to happen. Okay, so there's a big difference there. Structure tells you what has happened, and it can help you loosely predict, what is going to happen if you're on the right side of order flow. However, liquidity is basically telling you where we're going, and you can expect specific reactions from those regions. So you can kind of determine where we're going next. You can determine where we're coming from, right? And you can build this in-depth narrative using liquidity and of course imbalance as well, right? Which that's kind of the structure system built into it anyways. But I should say displacement, not imbalance. That'll give you a really good idea of where you're going to go. All right, so the first thing that I'm going to do is basically mark up the very obvious pivot points that we've reacted to. So I see that there's a very large pivot here, right? So I'm going to look left. I usually I strongly advise generally that you don't look left, and there's a reason for this. It's not that it's always wrong. It's that if you're like in an intraday chart and you just see a reaction, then you're looking left to see what it reacted to. You're just giving yourself a confirmation bias, right? You're not trading a system. You're trying to figure out, what price is doing and trying to give every single thing an answer instead of waiting for price to show you something that's in line with your edge, right? So that's why I really tell you guys not to just look at a pivot point and look left. However, in this case, like we're on a weekly or monthly chart, I know that this is a very large reaction. This is a monthly chart, remember, right? So I'm just trying to build a narrative. Okay, so I can go here and I can grab like this manipulation that's happened here. We have a breaker block, right? And I can just grab that and stretch it across. You can see we've come right into the breaker and reacted to it. Beautiful. Simple stuff. All right. And then if we're looking here in this leg, right, I only really need to look at the most recent leg just to understand the narrative. Come into this imbalance once, two, three drives, displaced away, and then come back up into this FEG, right? So this FEG runs up into POI, pushes off, creates an FEG, accumulation, manipulation, potentially distribution. We don't know yet, of course, but that's on the table. Right. I think I was initially thinking that we would run up higher, but it is possible we'll dig down deeper and possibly clear these lows. However, this is a very long, this is a very long ways away. And I do still think like macroeconomically that the DXY should continue to rally. I honestly think that the worst case for us is for the dollar to, you know, just like an extreme euphoric bullish run in the stock market. That's not a good thing. Not when it doesn't add up with, you know, the current economic factors that are going on in the climate, right? Okay, so anyways, without getting too much into that, because we're really not teaching like fundamental stuff, and I'm not the greatest fundamental trader anyways. We're focused mostly on technicals, right? So we've run up into this high, displaced away, and now the next thing I'm going to do is just mark out available liquidity pools, right? So we have equals here, and we obviously have liquidity here, but I don't need to know that there's liquidity here, right? Like I know it, I don't need to mark it out, I'm saying. I just need to know what the most obvious next stops are, right? Where is the train going next? So we've come from here, push down. We're expecting initially after this manipulation that we'd push up into here and then possibly get a reaction and then continue up, right? This was my initial bias. Now we've pushed down heavily. I mean, it's still on the table, of course. We can still come down in here and show some strength. However, it's starting to look like we're going to run lower. So in the event that price does run lower, you know, where does price want to go? We have this liquidity here, obviously, right? This is many months away. You have this liquidity here, and then we have some stops on the way, right? So the most obvious one would be like this imbalance right here, this imbalance, and it's going to retest roughly this old high, right? So as price retests this region, you're going to get some sensitivity to it. Generally as well, see, we have another imbalance here, but generally in a leg, when it's the last imbalance in a leg, and it's in line with your bias, it is usually one that gives you a good reaction, okay? In this case, it's down here, right? Not over here. So it's hard to say what's going to happen here. I would expect some kind of a reaction as well because we're on the monthly, just some kind of a reaction, at least on like a daily chart, right? But that's not to say that these monthly candles can't just print bearish, similar to what it did here, just printed bullish candles, right? Yeah, there's also the idea that this can just re-enter a choppy range, right? There's really no clear distinction yet, so we just have to kind of weigh in the possible outcomes, and that can help us to determine, you know, how we're going to trade, you know, if we're going to push our edge or not, and just kind of be conservative, right? Let's bring this all in. All right, so prices have pushed up into that FEG. This that monthly FEG's low. This is now a daily chart. Here's a weekly. Weekly doesn't really give us any new information. This is all gonna get, this is all fairly weak, except for one area, which I'll bring up in a minute. But here on the daily, we have swept liquidity here, right? Because this high is first off created equals, right? It's also taken out an old low, right? And then it comes up, takes out the old high, displaces away, and now we're in bearish order flow very clearly. And now I like to, of course, if I notice that I'm in bearish order flow, then I like to apply the structure system, right? And the reason for this is that it helps me, it helps to avoid getting caught just overanalyzing chop, right? So unless I see that initial drawn liquidity, the initial manipulation, then I do not apply the structure system, okay? If I do see the manipulation, I can understand that we're in some kind of order flow. Really, the magnitude doesn't really matter. As long as we're getting the displacement out of the manipulation, then I can start to apply that structure system because that's when it's most accurate, right? I also like to apply it in consolidations because it helps to guide you with the swing points, right? But if we're like in just straight up chop and I don't have a clear goal in mind, I can't build a narrative first, then the structure system doesn't really help you. The structure system is designed to help you get clarity within that narrative that you're building, right? So it's because the narrative is kind of a discretionary thing. The structure system helps you to add some mechanical aspect to that. Okay. So now we're in this range currently, but we do know that type ones, when we're pushing out against a previous trend, right? So it's an uptrend, we're pushing down on a downtrend against that uptrend. We're looking at type ones because type ones generally give us reactions. Okay. It's a type 1 ISP, it sweeps, right? So it's a type 1 POI. This is generally where we're going to get reactions, right? So we can kind of bait out that reaction, see if it wants to come up above something else. We can even potentially catch here. I think we'll run it. And I think there's a pretty good reason for that when I hop up into the weekly. But we may get a reaction from this region, be able to sell into it, right? So when we're in a high resistance condition, so by high resistance condition, I mean, when price is heading, it's trending into an area where we can expect a pullback, something that can cause a pullback, okay? Something that's not going to be easy for price to just run the liquidity above or below, right? And this is one of those because this has not given us a reaction yet, okay? Because of this, what we could do in this high resistance condition is wait for that reaction, wait for the realignment, and then push into the liquidity, okay? Wait for that same like power 3, not power 3, but like the AMD accumulation, manipulation, distribution to run those lows, right? Okay, beautiful. We'll get into the intraday after, but let's just stick to the DXY for the higher time frame here. Okay, so now on the weekly, this is interesting, okay? So this I haven't actually taught yet. It's something that I've been testing. When we see a signature like this, where price is manipulated, right? So we're in this bullish order flow, and then we see this. I want to take your attention to this candle right here. Hold on. Okay, right here. So we see that there is a kind of like a hammer looking candle. And then the very next candle basically engulfs and closes that up. All right. So you're getting something similar to this, right? This is basically an FEG. Okay. So you can look at this region from here, this Wix high to that Wix low, where that body is, basically this candle's body that's covered by the wick. And you can extend that out in time. And that's traded exactly like an FEG, okay? It has a technical name. It's called RBRD, rebalance, redelivered, okay? You don't really need to know that. All you need to know is that it trades just like an FEG, okay? So basically what's happened in this candle, and this is going to be in the more advanced section of the new course where I teach these things. These are called like price signatures. Generally what this means is that we're going to do a deeper run on liquidity, right? So this is showing that very like quick bullish, in this case bullish intention, right, to just rebalance price action and then really quickly like within that same candle and then continue to rally up. Okay, so if I grab this area and extend it out in time, I'm very interested to see what happens in this region, right, which is stacked with an OB, and see if this region does want to bring us up and then put into new highs, right? Below this region, then I'm definitely looking at the bearish side of the narrative, okay? So we just have this basically last line of defense, in my opinion. I would call this my last line of defense. Of course, we can come down into this FEG, but this FEG is no more heavily weighted than this FEG, okay? So FEGs kind of have like a hierarchy. So you have like an unstacked FEG and then you have stacked FEGs, right? So if we were running like an unstacked FEG here, of course, then we may want to be pulling down into a stacked one, okay? And then if this stacked one fails, then there's this stacked one, but this stacked one slash PPR, but this stacked FEG is no different really than this one. So I would kind of assume, not that I would assume in trading, but I would be a little more cautious about trading from here if this one fails, right? Because it's basically of the same weight. All right. So yeah, if we push down into here, I'd be very interested to see what happens. And then as price delivers away from that, I'd be looking at up here. This is pretty low resistance condition up here as well, because it doesn't, like this high doesn't sweep the previous one, right? So we're not getting that type 1, at least not on this time frame or on the monthly time frame either, right? On the daily time frame, sure, we have like a little type 1 here, but that's more relevant to the cause that price, that what caused price to push down. However, when we retrace back up into there, if we are bullish, we're just going to run those highs, right? Any questions about that so far? There's going to be much more information regarding in regards to like this kind of delivery. Yeah, it's more advanced and there's context around it and when it comes really in handy. So for example, if we get the same signature and then this candle like push down into there, it's a very, very good buy when you're in bullish order flow. I'm not just going to place a limit here, of course, because we're now trading in bearish order flow into it. So I need to see things start to realign and then trend, right? Like this is immediately bullish order flow. This is clearly bearish order flow now. It is a little more corrective than what we've had here. So well, let's see what happens. It'd be interesting to see. All right, so let's now the next thing I do, right? So I didn't go on lower time frames on the DXY at all. I'm just building a narrative, right? So I understand that we have an area to catch onto below us. And if that holds, then we'll go long. If that breaks, then we'll go short, right? So long on DXY means bearish on USD. Pairing is where USD comes after. And then bearish on DXY obviously means bullish euro dollar, right? So now I'm going to look at and try and fit that narrative into the price action that we see here on Euro USD. Right. So going back to this FEG that we were talking about, this gets tapped into, breaks through, and now we've displaced above it, right? So we can still use this FEG, right? Because we've displaced through it. We've displaced through it and completely like neglected it. Price may want to hold it now as support, right? And I know some of you may be thinking, oh, well, aren't we just trading support and resistance? Essentially, yeah, right? Like FEGs are true support and resistance in the market. And we see that just based on the numbers. We know that it's very easily measurable and it gets the reaction. So if we've pushed now, displaced above it, we may find interest in this region, right? Of course, we can close out an FEG here and use that as well. However, we don't need that FEG, right? This is where first line of defense comes into play. We don't need this FEG to actually close for this to be valid, right? So this week's candle can push down into here and then start to rally off, right? So that would be interesting to see as well. Do we have any? Oh, okay. So on the daily, we've already actually done that. We've swept the lows of these candles, come into that FEG or that imbalance, but most importantly, when I see a large FEG like this, I'm looking at the liquidity basically, right? Because you have to understand what's going on here. What's going on here is we've built out a range, we've manipulated that range and displaced above. And that's it, right? So there's nothing necessarily important about the FEG in and of itself. It's really just the liquidity here, right? So we've liquidated into that inverted FEG here, reclaimed FEG, and now we're trending up, right? So the question to answer is, where are we coming from? Where are we going? So we know where we're coming from. Then the rest of the equation is where are we going, right? So we just have to map out available buy side liquidity. Right, so if price is coming from sell side liquidity, what it deems a discount, which would be this flipped FEG, we're going to look for available buy side liquidity targets. So we have one here, and I'm just not just going to mark out every old high and low. I just want to start from the top down and get the most obvious representation of basically what price is doing, right? So here we have liquidity up here. And we also have this weekly OB, right? So we can potentially liquidate above here into the weekly OB and then monitor price, right? So now I'm going to go back to the DXY and kind of get an idea of if they line up at all, right? So we were talking about here on the DXY of potentially running this low. Price may want to run this low into the POI that we have, excuse me. Ugh. Into this POI that we have, which would be in line with EU running up a little bit into this monthly FEG after liquidating these highs, right? It could potentially come above here. as well. But ideally what I want to see if we are in a bearish scenario is that we're getting just some serious sensitivity to that monthly OB, right? The monthly type 1. Right. We can also pair in things like OTE of the entire leg. So you're pushing back up now. We're about to hit into that OTE, right? So these things are now stacking, right? We're not going to immediately believe that price is going to go bearish as soon as we hit this. We're still going to favor the order flow that's happening in the market that's already in control. But we're going to wait, excuse me, for that the FEGs to flip, right? Sorry, for the FEGs to start showing bearish intention, and then for market structure to flip. Right? Okay, now on GU as well, we're going to build into that same narrative that we've now built on DXY and EU. And so we're building not just a bias for every individual pair, but we're looking at every individual pair in confluence to build out an overall narrative of the market for the coming week, rest of the month. Or we do this every single week, and then you reevaluate it midweek as well to just see if you're on the right side or if anything major has happened that is changing your bias, right? Let's pull up Forex Factory as well. I think it's a short week this week because of Thanksgiving. All right, so what is it? Maybe, yeah, bank holiday on Thursday.
Yeah, it should be.
Yeah, it's American Thanksgiving. Yep.
Yeah. So what is Friday then? Is that off as well, or?
That's Black Friday. So I don't know if it's a bank holiday necessarily, but it's not necessarily like something we actually want to trade. But yeah.
Yeah. So I would probably say just trade. We're going to be trading basically Monday to Wednesday. I think today is going to be probably an okay day to trade. Yeah, we'll see. Just because, if it's a holiday, they might get their trading activity done earlier in the week, right? I don't know. It's just on a whim, but yeah. Okay, so on GU now, we're going to build into that same narrative that we've been building and just get an idea of what price is doing. GU looks like garbage, to be clear, but it is what it is. I don't even know where to start with this, right? Like we have an FEG here that prices may want to reach for. Let's see, on a monthly, yeah, which is in line with that low. So it seems like the most obvious narrative would be to retest this monthly low, just filling that imbalance, and then getting an idea of what's going to happen from there. On GU, we have bullish ISP here, and then we're just retesting this low. Let's make these smaller. We're retesting this low, so we're expecting this is high resistance, right? Because it's protected by our ISP. So that's that's what's happening right now. It's possible that can bring us up to higher prices, right? So again, we don't have the information available to us yet, right? Because we still have to see what's going to happen with the DXY and on EU, but it is lining up to take us to higher prices, right? We don't have too much on the side of what can bring us down lower besides filling this imbalance here, retesting that monthly imbalance, and then filling this little one on here on the weekly, and then monitoring price from there. But currently everything is bullish, right? We have those bullish monthly ISPs. The weekly, of course, is bearish. We have the SMB here. The daily is bullish in line with the monthly, so both the daily and the monthly are bullish. So it is possible that this is just a weekly pullback to continue higher, like a reaccumulation of orders. However, yeah, again, we don't have enough information because we have some conflicting information on the DXY and the Euro, right? But we're still going to monitor this and see what's happening here on GU. We have swing point, type 1, type 2, and a potential type 2. We still need to clear out that high. We've just wicked above it. But yeah, we still want to see that intent to go higher. All right, so we're in that bullish order flow, and we're just going to follow this bullish order flow until we're proven wrong, right? That's all that we do every single day, is just follow the order flow until we're proven wrong, or until we hit like an area of liquidity where we expect that these will fail based on the higher time frame bias as well. And then we can either just we can either take the risk and trade that, or we can step off and wait for those ISPs to form in the direction that we expect, right? So we'll wait for the SMB and the ISP failure and that kind of thing. Yeah, so GU not too much information on the higher time frame. We do have a bullish trend. If we go to the monthly, is there anything in conflict with GU? So GU actually swept the low. So we have a very large SMT here on GU, a higher time frame SMT on GU EU. We've taken out that low, right? So now we have this also bullish signs in the market. So we clearly have some conflicting information, right? We have some conflicting information. And I think for me, until we really run below this low, I think we can't be fully bearish long term. However, I think it's very high probability to trade into this low. Okay, so just following what's happening in the market and trading into this low. So that would mean following what's happening in EU and trading up to these highs, and in GU just trading up into these highs. Like I think that's very high probability. And then from there we can reevaluate, or we can step out of the market for a bit and basically let order flow, and if there is consolidation, just let it develop a little bit more and give us an idea of what it wants to do next, whether it wants to hit like a reversal or some phase of a reaccumulation or something like that, right? Until that happens, then we just continue to trade what we're already seeing in the market, right? So we have an idea of where order flow is going, which is bullish, right? And then we have higher time frame targets, right? And we believe that at these higher time frame targets, there's a very real possibility for a reversal. Not that it needs to happen, and not that we're counting on it happening. We just understand that there's a probability of it happening. However, just because we know that there's this reversal that can possibly happen at this region, doesn't mean we don't trade up into this region, right? Because we already know where price is going, right? So we're just thinking like 5 steps ahead. We know where price is going. We know where we can trade intra-week, which is up into those highs. For example, on GU or on EU, we're trading up into here for the week. GU, same thing, trading up into those highs. DXY trading down into those lows. However, we understand that this is a very sensitive and very important area, key level. So we're going to want to see what price does from that region. However, we want to be trading into it, right? Just because we have an idea of what may happen in the future doesn't mean we have to wait for that to get involved with the market, right? We're day traders. Okay, NQ. So I'm going to skip over the other minors. You guys can do them on your own, following the same formula that we use here that I'm walking you guys through. Let's see here. Last stop candle. This is all mitigated. Everything looks pretty mitigated. Just go to NQ1 chart. Let's see everything. I think we're gonna run the highs. DXY, if DXY continues to go bearish, then I would expect that NQES will continue to run bullish. So we're going to follow the same thing, just identify where liquidity is. We have liquidity above this region. I think if we come above this region, then just fading any of that selling pressure and expecting prices to go higher, as long as it's in line with, the DXY and the rest of the pairs, of course, on the higher time frame. But if we come above this region, yeah, I would expect to see some kind of a pullback, and then I would fade it. I would fade it because I would expect higher prices, right? Clearly, lower prices are not necessarily they're not on the table, right? This was a pullback. This did not bring us down lower than it did. So now that the low is set in, I would expect that we would form some kind of an extension of this leg right here, right? So if we know anything about structure, it'd just be like there's your first stage, which is your initial impulse. Second corrective, third is your expansion phase, right? So outside of that leg, right? So you get your low, your higher high, higher low, and then we're putting in another higher high, right? So that would be your extension of that leg, which that's what we're looking at. Now, what we're going to do is we know that there's liquidity here, and we're also going to look left to see what the price wants to hunt, right? So we see that there's this imbalance that's untouched. So price may want to run above this high and then come fill this imbalance, which is what I think will happen first. I think that any move from here should be faded and we should trade up into here, right? And then we have buy side liquidity above that as well if this doesn't cause us to roll over, right? Which I doubt it will, but still I think we'll get some kind of a very large reaction from this region. Excuse me. God, I've stopped yawning, man. I got the yawns today. Where we extend past this high, right? But we're gonna get some kind of a reaction, create those equals, and then we can trade up to it, right? I don't ignore the depth of this reaction, right? We don't know what that is. Yeah, and then ES1 again. So if you type ES1, that's going to give you all the contracts put together, so you're getting a full chart here. And then the same thing, let's pull up both charts together. What's going on here, really? Picture of that. There we go. So let's see what happens here. Push down, retested these old lows, right? So you're going to notice a lot when I'm doing my higher time frame analysis, it's very loose, right? I don't need to over analyze. I just need to know the general idea of, what's happening in the market. And we've retested this old high. This pushes us down into liquidity that fills this imbalance and then pushed up, displaced away out of this region, came back to retest that old low and is bounced off, right? So just looking at the monthly time frame alone, obviously we need to wait for a close. We still got 10 days of the month, but looking at the monthly time frame alone, it seems like we're going to run these highs, right? On the weekly chart, retested those old lows again, basically to the T, respecting with the body, displaced away, ran the high, gave us an SMB. SMB pushed up, and we're in bullish overflow for the last few weeks, similar to what's happening on EQ. So one of these is surely going to make a new high, for sure. Whether both will is yet to be determined, but one of them will surely make a new high. If one of them makes a new high and one of them doesn't, we can maybe expect that pullback to happen, but again, fading it, right? Fading it until we hit that imbalance here in the market, right? When I'm analyzing or when I'm building a narrative, I'm not just trying to figure out, where prices are going. I'm also thinking in, terms of a trader, right? How can I validate or invalidate trade ideas? What can I expect if I'm looking to take trades that can happen, that can work against me or work with me? I'm trying to build up a frame of, again, invalidation points and validation points, right? So I know that above here we can push down, but that doesn't necessarily mean, I don't know if my mic was too low this whole time, but I don't know if that necessarily means that we're going to, reverse from there, right? But I understand that taking a trade from here would be silly because I can expect a reaction from here, right? So when price runs down lower and then realigns, now I have an invalidation point, right? I have an invalidation point that says that my whole idea is wrong if we run that low. Up here, if we just run this low, where's my invalidation point? I don't really have one besides down here because I'm expecting a pullback. I have to wait for that new low to be set so that I have a new invalidation point and I can trade the bullish order flow into the target, right? And that's what I have to think as a trader. You have to constantly be thinking about what can happen and will happen against you or for you, right? If you don't do that, then you're going to be getting wrecked constantly. Yeah, no problem, man. Yeah, so that's basically the whole idea of, the higher time frame narrative that we have so far, the available information, and we're going to reevaluate this midweek and next week in December, of course. Coming into December, seasonality for December is we're going to get thinner liquidity, so we may whipsaw, may not follow the plan as well. Depends. We have a lot of new economic factors going on. but let's pull up some seasonalities. December is generally bearish on indices. So we can also build the seasonality into what we see on the chart, right? So if November pushes above these highs, December may be bearish from these regions, which makes sense, right? Now we're coming into an area where we can see that bearishness. Does that need to happen? Absolutely not. But seasonalities are basically the average trend over 100 years, or, well, in this case, we're looking at E-mini NASDAQ futures. So early 2000s, maybe. But overall NASDAQ, yeah, we're going to look at bearishness this season. Hold on. Seasonalities. Look at NASDAQ. NASDAQ 100 seasonal chart. Okay, so return percent over the last monthly averages over the past 20 years, the return percent averages at 0.3%. So that means it's a 50-50. If it's 0%, that means that 50% of the time it's above zero, 50% of the time it's below zero, right? So zero being break even. You can just Google it, NASDAQ seasonalities, equityclock.com. I was looking at seasonalcharts.com. You can get an idea of what's happening. We'll definitely touch up on that as well in the new course. But yeah, so it's a 50-50 gamble. So that means that we're basically just going to look at what the chart's telling us. We have no strict bias with seasonalities in December. 50% of them bullish, 50% of them bearish. If we're already bullish, I would assume that it would probably continue to do the same. So I would lean towards either a range bound, which I think we're going to get consolidation, right? Roughly consolidation. If we come into liquidity here, we're stuck between two higher time frame POIs above that region, we're probably going to get consolidation before ultimately making a run for buy side liquidity. Same thing here. Ultimately, right here, we're going to find consolidation before running buy side liquidity. This is a high resistance. This is low resistance, right? These are equal lows, lower than each other. This one actually sweeps that high, right? So we can expect a reaction from here. So I would be ES probably going to be more choppy up in that region than on ES. And that's it for the higher time frame markdown. So we have a general idea of all the different things that we can look for in the coming weeks and months, right? And now we're going to talk a little bit about how does that weigh into intraday bias. Okay, so we have an idea of where price wants to go, for example, in the DXY, right? We'll use DXY and we'll use EU. Okay, so if I have an idea of where price is going to go, I have a draw on liquidity. This is your next target. How can I use that? The question is, how can I use that information to help me or aid me in intraday trading? So the first thing that we're going to do is apply the power of three. Okay. So if I know that we have potential areas of interest that we can run to or run that we're drawing into, and areas that we can hold as support, of course, then we can apply power of three. And power of three is, in short, understanding the development of an expansion candle in any chart, really, but we really apply this to a daily chart, right? So we know that the open, we're going to have the open. So what we're going to do first to mark out the open is mark out 12 o'clock. So we're going to mark out 12 o'clock. All right, 12 a.m. Mark that out. There's 12 a.m. open. All right, so we got 12 a.m. open there. So now we're going to look for manipulation below that. We may have gotten that here at London. All right, so power of three. Again, we're looking for the open. And if we're expecting a bullish expanding candle, we're going to look at the open. We're going to look for the manipulation that sets the low. Generally, you're going to get like a range around the open, a manipulation that sets the low, and then distribution that runs to set the high and then the close, right? So in a bullish PO3 scenario, we have open, low, high, close. In a bearish scenario, we have open, high, low, close. Okay, so it's just setting the daily candle. And now we're going to make sense of that using sessions and just understanding, the delivery within that idea there. So we have this FEG, this imbalance gets tapped into, sets London low. Mark that out. This is London low. All right. Runs up, and this happened below the 12 a.m. open. Runs up into the high. Pushes back down. And now we're heading into New York, right? So the question to ask is New York going to be a continuation of London, right? So we have an idea that we're going to be pushing in an expanding daily candle, most likely. So how is that going to look on an intraday chart, right? Using the sessions. And the only really way there are profiles, but the only way to do this is to just do it through repetition and study it constantly. So every single day, study the delivery matching the daily candle. So what we're doing by marking out the sessions here as well is just marking out available liquidity, right? Everything is always, if I don't mention it or if I do mention it, I'm always talking about the available liquidity, right? So that's just a common theme that we're always looking at and analyzing on the chart at all times. Okay. So we have liquidity below London low. So I'm right now building out a narrative that would tell me whether we're going to expand or not, right? I don't necessarily need to know if it's going to expand beforehand. I just need to know the available scenarios that can play out, that can lead to that, so that I'm prepared to trade, okay? Ran buy side liquidity at London session. We have a bullish bias here still. There's not necessarily any new information here on the 4-hour. The daily, of course, we have that ISP pushed up. Do you have any information on the 1-hour? We have an ISP here. So we'd be thinking that this would be protected, but this is chop, right? We don't really have any clear displacement. So I'm going to assume that this is really not tradable currently. But we're still going to monitor it to get an idea of what price is doing. So we have liquidity below here, 12 a.m. open, buy side liquidity. We have buy side liquidity up above here. We've pushed back down to that 12 o'clock open above London low. So if price wants to expand here through New York, it's really ugly. This is all chop, right? We don't really I don't want to overanalyze substructure, but what we're looking at here is basically from here to here. We've come down into OTE. For me to take any sort of long, I would need to see a manipulation happen. So either ideally a manipulation below here and then a displacement away. And if we get that manipulation below these lows, maybe it wants to fill in this, but if we get that manipulation below these lows and then we displace higher, then I'd be looking at all of this being taken. Until I see that manipulation occur, then I have no interest in trading EU whatsoever, right? I have no interest in taking longs either. We're not looking at GU. Hold on, man. I have no interest in taking shorts either, right? Because I mean, why would you? What are you going to short from? You're going to get smoke trying to short from here. And in GU, we have ISP. We failed to break. We still have a buy side draw. We have imbalance over here. And I think we've just now tapped into imbalance over here as well. We have a little one right here as well. We're just trying to build up that narrative, seeing what's happened. So price runs down into this imbalance here. takes out this low, so we have that SMT, but still not interested at all. Like this is chop, more chop, nothing of interest here. I would be looking at the external range liquidity, right? So yeah, we run the London low there. I don't see any displacement. That's the main thing, right? So what I want to see again, like I don't even want to touch GU. GU just looks ugly as hell to me. If EU sweeps below here, I'd be very interested to take a long if we get the displacement. Let's see here. Does that sweep the low? So if we mark out ISPs here, ISP, ISP, ISP. And then you get an SMB here. So it's short-term bearish here on GU. Yeah. So the only stacked FEGs down here. We may want to run down deeper. If EU wants to run down deeper and manipulate these lows, then I'd be interested to see what's happening on GU. GU will probably come fill in this imbalance. And then from there, we can see potentially bullish prices, right? But yes, right now I'm not trying to figure out what price is going to do so I can just trade it, right? I'm trying to figure out what is the most high probability scenario for me, right? So that's literally that's it. If sounds like a backtesting candidate, yeah, most likely. With like this FX at least looks really ugly. I'll be interested to see what IQ and ES does on the open. Unless you want to trade counter, I do believe that we're going to run into here on GU and we're going to manipulate below the lows. It's very corrective, so I would assume more corrective PA to happen. And that's if you're even open a trading counter, which for me on this pair, I'm not. If I'm going to trade counter, I'm probably going to choose futures because the delivery is better. Here on the 30-minute, create that FEG. So yeah, we're looking at lower prices most likely. Looking at lower prices, we've manipulated above the high, pushed down, creating a bearish trend, very choppy, but it is a bearish trend. We're going to run these lows, potentially run London lows. So this is probably like search and destroy profile forming up where we're just kind of liquidating everything as GU makes a deeper pullback and to discounted regions. So, okay, so you asked question, is it relevant at what time the ISP forms when the big boys are in the market? That higher relevance than outside the session? I think what matters more is it's a good question. No, I get what you're asking. It's a good question, but there's just more to it, right? It's not as simple as a yes or no. Because yes, it matters, but also like what precedes it also matters, right? Like what is the time of the manipulation? What is the order flow, right? Are we in strong trending order flow? If you're in extremely strong trending order flow and you're seeing ISPs form over Asia session, right? Then you know that those are still going to be valid, right? You have a clear draw on the buy side. If we're in like a consolidation, we see some ISPs forming, then I would either look at swing points or I would look at the external range liquidity. And just wait for that manipulation for those ISPs to form mid-session. That's what I like to do, right? I like to trade the ISPs that are forming mid-session for the same reason that you believe there, but that's not always the case, right? Generally, yeah, the highest probability ones are going to come mid-session, the development of ISPs mid-session. But yeah, there's definitely more context to it than that. Going on my ES chart. Oh, it's a big ass gap. There we go. ES chopping away. NQ chopping away. I'm just going to assume that this is going to continue to happen until we're proven wrong. So because we're in consolidation, what's the first thing that we're going to do, right? What are we going to do if we're in consolidation, guys? How are we going to be the markets? Old guys. What's the best
Look for swing
practice?
points.
Yeah, we're going to identify our swing points and understand that those are probably where price is going to trade to and get reactions. So we're going to mark out swing points and external range liquidity. Okay, so what does that look like? We have ISP here. We have obviously ISP is the left, so this one is a swing point, right? So all we really need to know is where is the most recent swing point. We have a swing point there. We've gotten a reaction here. That reaction has failed to push us up higher. And we're potentially getting a swing point here, but it's unconfirmed because we haven't actually broken any highs. We have liquidity above. Liquidity above. We have the daily chart here on NQ. We have this volume imbalance on the daily, which price has reacted to very cleanly. And now we're building out this range here, right? So we've hit higher time frame liquidity. And what do we know about higher time frame liquidity or liquidity in general, right? Liquidity does two things. It does one thing. Liquidity changes the market condition. Okay. So when we hit liquidity, an area of liquidity, market condition changes. And that can either equal or lower time frame structure fails. Okay, so we've already seen the lower time frame structure fail, of course, as we've pushed down, and market condition is completely changed. So we went from very bullish to consolidation. Consolidation can go into two things. It can either go back bullish or it can reverse, right? So I don't want to play the guessing game, and I'm going to let prices, or I'm going to let the chart kind of tell me what's going to happen, right? So it seems like today's a sit out type of day, to be completely honest. What I'm looking at here is because we're already in this bullish order flow, market condition has completely changed as we hit liquidity, but because we're still in bullish order flow at the end of the day, right? This is a pause in the market. I would be looking at external buy side liquidity. So perhaps price wants to sweep this, and there may be a trade idea that can bring us up into here that's tradable. However, I would be really interested to see what happens above this region. I think that ES is going to, if it runs above, I think ES will run above it and NQ won't, and that'll be a nice cause for a deeper pullback before potentially continuing higher. And then we'll revalue it midweek, of course. Do the same thing. There's the open, right? There's 12 o'clock open. A little bit of manipulation over London. London pushes up. We have London liquidity, high and low. And that's it, really, right? There's Friday's New York session liquidity as well, which you can run below. Like these are the available liquidity points. So for me to take a trade, especially if we're in a range, I need to see a manipulation happen. Need to see. It's a must for me. If I'm in a range, I need to see liquidity getting rated and then trading to the opposing side. All right, later, Paul. Anyways, that's basically the end of the session. Anyways, it's just question time now. So not too much really to talk about. Just want to show you guys how we walk through, higher time frame bias building and the importance of it, and how we use that to frame up trade ideas, basically through the eyes of like invalidation and validation, right? So all trading is trying to determine, it doesn't matter what you're trading, support and resistance, trend line, MAs, it doesn't matter. Trading is just the identification of invalidation points for your stop losses and validation points or your take profit points, your exit points, right? So, and your entry. So areas or criteria that you need to see to take a trade, and then an invalidation point that says you're wrong. If you can determine those two things, it doesn't matter what trading style you take. That's all trading is. And we use the higher time frame to form up potentially, months, weeks, or multiple days worth of ideas that we can then validate on lower time frame and trade in those directions, right? So that's all we did today. Today, I mean, there's a lot up in the air, right? And that's what trading is sometimes. Your edge is equally getting involved as much as it is identifying when to stay out. And I already now highlighted what I'm personally looking for to get involved, which is runs of liquidity on GU. I want to see that this runs down further. I think that this is a good trade here on GU right now. I'm not taking it. It's way too choppy for me, but based on, I mean, bias, yeah, bias is this high is not going to get taken. We're going to run down. However, I'm not taking that, right? It doesn't fit my criteria for an entry. Now I'm open. I'm definitely open to getting involved a little lower for sure. That would make sense. That would be an okay trade. EU, just looking to run that low. Everything in here looks pretty choppy. But still the bias is to run these lows, which will probably happen by the end of the day. Not looking at the other guys there. And then ES and NQ, kind of the same thing. Run, manipulate the lows, but I'm not looking for a trade unless I manipulate the lows. Like, I don't want to trade to it just in case I'm wrong and it continues to chop. Same idea with EU and GU. I'm not going to trade to it just because the previous price action is so choppy. Why do I want to be involved with that? Right? What if I'm trying to get involved here and it just wants to chop all session and then rip you on your P&L, right? That's it, guys. Any questions? All right, so this is how you apply 12 a.m. open power 3 concept. First thing you have to do is identify whether you think it's going to be an expansion day, right? So do you think that the next day is going to be a bullish day? Okay. If you say yes, there's a possibility that it'll be a bullish day, which would make sense in this case, right? We've pushed down, we're coming to that FEG. We're expecting that next day will be a bullish day. That makes sense. It's in the right area for that to happen. We're going to look for the 12 o'clock candle. 12 a.m. Right. You're going to anchor it to the open. A 15-minute chart, make everything a little easier. And you're going to extend this over to basically like 11 a.m. Okay. Because the low of the day, the manipulation can basically happen anywhere, you know, between the open and 11 a.m. Right. Generally, that's where the low of the day forms. Okay, so where's 11? Oh, God. Where's 11 a.m.? Right there. Oh. There we go. Okay, there's 11 a.m. Right. So basically, if we believe that prices are going to expand up over New York or London, we're going to look for that manipulation below the 12 o'clock open that sets the low of the day. Right. So what we're going to do is first off, mark out 12 o'clock open. We're going to then mark out the available liquidities below and look for what can be manipulated. So we have a previous daily low here. This is a PDL. Previous daily low, that gets manipulated below and then pushes up, holds on to the type 1, and then displaces away, right? So now we can confidently say that this is the low of the day, right? If we identify that within the power of 3, it's open in a bullish scenario, low, high, that would be the high of the day, wherever that is, right here. Close, right? So open, high, or open, low, high, close, right? So open, we're looking at 12 o'clock open, right? Not when the broker flips. We're looking at 12 o'clock, okay? Because basically the theory is that this is when the algo like resets every single day, okay? So 12 o'clock open, pushes down, sets the low of the day. It manipulates the PDL below 12 o'clock open, displaces above. And now we know that this is the low of the day, and we can start to trade bullish from now on, right? So we have the whole shebang here. We have the SMB. We have an imbalance that gets filled. The only imbalance available. I mean, we have this one, of course, but this one's a BPR. We run deeper. Fill that BPR, taps right into the 12 a.m. open as well, and then continues to rally off. Pushes down. Imbalance. That imbalance is respected. Pushes off, and it continues to trend from then on, right? So we can just clearly see the manipulation that happens at 12 o'clock open. And first off, we can trade this in London and trade the longs, or you can trade the continuations in New York, right? So does that answer the question, or do you want more detail? Obviously, you need to know the rest of the plan, right? This is just that one concept alone, which is basically telling you what you're looking for, which is a manipulation below 12 o'clock open to set the low of the day in a bullish scenario. In a bear scenario, you look for the manipulation above 12 o'clock open to set the high of the day.
Yeah, that was good. It was just a question if it was like 12 a.m. Eastern time with the Eastern candle.
Yeah. I was answering MB's question.
Oh, I didn't see it. Sorry.
Yeah, no, that's all good. All right, that's it. Any other questions, guys?
Yeah, no, thanks, man. Appreciate it.
Awesome. All right, then we'll end it there. It seems like today's going to be a slower day. We'll see what happens at the open. I'll see you guys in the chat. Yeah.
All right, man. Thanks.
Later.
Yeah.
Later.
Thank you for the session.
Ciao.
See you later.
Bye.
Peace.